Hey everyone, welcome to episode 255 of the Your Money, Your Life podcast. We do this every week. So make sure before we get into the podcast, you like, subscribe, 5-star rate and review the pod, and keep in touch with what we're doing. And also watch on YouTube if you want to see more of the visual, see the shared screen, see what we're doing. That will be the best route to do so. Speaking of which, as we get into this week's, the first and foremost, we're looking at the stock market. It's been a decent few days for the market. I would say the past week has been decent. If you look at it, 5 days, we're up slightly. We're having a big day today as the market's open. It's been, a little bit above, a little bit above flat. Last few days, we're up over 0.5%. The last month, it's been 6%. And year to date, it's around 13, a little bit under 13%. So the market again tracking well. You're seeing some different things with buyers come in, and specifically, talking about earnings. That's one of the reasons why buyers are coming in. Nvidia, which is probably the hottest stock of the last 12 months, they came in with earnings and said they tripled their data center. Their data center business grew by more than 400%. I mean, a year earlier. So um, their business is not slowing down. A lot of it's driven by their AI algorithms, language models that they're using to drive data center business, to drive activity. Um, and it's still hot. It's still going. They're spending billions. That customers are spending billions with Nvidia on chips, and it'll be able to make money off AI as well. It had concerns that has been swirling around the company that there's only so much more cash clients can burn on infrastructure before they need to see some profit. So NVIDIA's chips can provide a strong, sustainable return on investment that suggests the AI boom may have more room to run as it moves past the early stages of development and as companies pay for longer term projects. So they're just trying to get a sense of how long people could just keep buying these chips from NVIDIA, and if the business is going to slow down at some point, or if they can somehow make it stretch where these longer term projects and companies are paying cash for these longer term projects to go through and not just paying for one time for some sort of chip that will generate what everything the company needs. So that's the big earnings tip on them. The market's liking what they're doing so far. They're up pretty handily this morning. In general, and they also announced a 10-to-1 stock split that will occur June 7th. In general, you're just seeing more earnings numbers, more numbers coming from tech companies, from other companies, and they're fairly strong. Again, that's why we're seeing the market, which doesn't have much data right now. We had the Fed meeting minutes yesterday, and the market kind of moved lower on that news, as the Fed pretty much said that they haven't seen enough progress on inflation to begin pulling back any of their policies or making changes right now. But you're seeing more and more data. Jobless claims came in. So we're going to keep getting more data, but the market seems to be running off this NVIDIA news first and foremost. So at least so far in the early trading today, that's what's driving things. As you see, the S&P 500 is now getting back to around flat for the day. And NASDAQ was trading fairly well last time I checked. So we'll keep an eye on that. In other news, TikTok is actually announcing potentially layoffs. They started notifying employees on Thursday morning that they will axe about 1,000 workers in operations, marketing, and content. The cuts are going to come amid ongoing reorganization because they have mounting pressure to become profitable. So TikTok is also facing a potential US ban. So there's a lot going on with the company, and they're now announcing layoffs. So this is the average tenure of people who have left TikTok. The average tenure of people who have left TikTok has doubled in the last year. So average tenure of departed employees. Okay, interesting. Interesting. So TikTok employees have started to jump ship, with most coming going to competitors. The average seniority of employees who leave TikTok is double what it was a year ago. So it's not just the new person churn that comes in. It's people that have been there for a while are starting to leave. So that's interesting enough. And that's data you have to keep your eye on. So yeah, there's a lot going on with TikTok. For the next 6 months to a year are very uncertain. So that's going to drive a lot of people to be anxious that work within the company, I'm assuming. In other news, TNT, ESPN Inc. college football deals. So TNT, as part of Warner Bros. Discovery, has reached a 5-year deal with Disney's ESPN to carry or broadcast college football games. So TNT will broadcast two first round games this season and add two additional quarterfinal games beginning in 2026. Warner Bros. Will pay ESPN an average of 100 million per year for the games over the 5 years. This is reported by CNBC. The deal comes as networks and leagues battle out for sports rights. So sports rights are probably the biggest thing on the market that you can get if you're a broadcast television company. The NBA deal is coming down the pipeline. We don't have an article on that, but it's supposed to be that it's going back to NBC, staying with ESPN and leaving TNT Warner Bros, meaning the NBA rights, which would mean that, no more games on TNT for the NBA games on TNT for Warner Bros, which is a big loss. So these sports right deals are huge because they bring in the most eyeballs and viewers, and that means the most advertising dollars as well. So they're bidding for these are sometimes a loss leader as people were explaining the model. But in general, you just want to be able to get eyeballs, get audience that you can sell to advertisers, and you need sports rights to do so. And so we're going to see a lot more come down the pipeline with that. There's a new rule for pay later loans. So under a new rule, remember if you know pay later loans, a firm Klarna, they tout these break up pay loans. So if you want to purchase something, consumer products like clothes or something, you can pay in installments, and some of them are no interest. But they take data and they sell it. They do different things. So all good. But now there's a new rule issued by the Consumer Financial Protection Bureau for people who take out pay buy now, pay later loans, will soon enjoy the same protections as credit card users. So credit card users have some protections, and now they're going to put those protections for now buy now, pay later. The revised guidance for cards BNPL, BPL providers is the firm and Klarna to issue prompt refunds on returns and send borrowers comprehensive bills and allow for pauses in repayment amid charge disputes. Okay. So now they'll say if you return something, you get the money back issued. If you also, if you're a borrower of this BNPL, then you will also get comprehensive bills, same as you would get a credit card bill statement, and you could pause repayment amid charge disputes. So those are pretty important protections for people that are using BNPL. So I would assume they're kind of modeling it after the credit card because it is simply taking credit, borrowing, and so now they're putting those same things on that. Here's a CEO of a firm, one of the BNPL firms. He said, "We greatly respect the Consumer Financial Protection Bureau's efforts to protect and support consumers. We're pleased that the Bureau is prompting consistent industry standards, many of which already reflect how a firm operates." So blah, blah, blah. He goes into his thing. The big thing for for a firm and Klarna, it's just going to be more overhead for them. They now have to send billing statements, which if you're sending billing statements to a lot of people, you'll be surprised how quick that adds up. They now have to send back refunds right away, which for them, if they held the cash for a little bit longer, they got interest on it. So it just adds more overhead expense for them in many cases, but they have to do what they have to do. Wealth exodus could cost Massachusetts 1B. So high earners are leaving Massachusetts in droves and could cost the state 1 billion a year in revenue by 2030. They're saying high taxes and expensive housing costs for the exodus which has increased tenfold since 2013. Most workers are in their prime working years, particularly 26 to 34-year-olds, and a majority were high earners. So, toss of the loss. The state recently passed a millionaire's tax that's collected 1.8 billion, far more than expected. It's too early to tell if the tax may accelerate the exodus. So to so people in Massachusetts are saying it's too expensive to live there, and they are now leaving and going other places, and it's costing the company 1 billion in tax revenue. So to combat that, they had a millionaire tax that's collected a lot of money so far, but it may lead to more people leaving. Of course, it will. If they're a high earner, they're going to want to leave and not pay as much tax. So that is another thing you're going to see in just different areas. Tax revenue is going to be a big debate topic because the government's going to be increasing taxes or trying to in a lot of different cases and will succeed. States will as well in different areas. Spot ETF approval. So as you know, the Bitcoin ETF was approved. ETF approval for ETH um, is on the way as well. And so that's big news as well for crypto people that are understanding what's going on. Interesting. The pandemic darlings, Moderna, Zoom, Etsy. Um, they're showing the top of the pandemic boom to where they are now. That's the way for yeah, a lot of people haven't recovered and just being solely in names that they hear, which is another thing that's going on. You're gonna hear Nvidia a lot, all these other names. Again, you do not want to just be buying after you heard. If it's already in the news and you heard something and now you're just like a casual person that doesn't follow this every day and you hear about it, trust me, that's not the right time to just be trying to throw a bunch of money at it. Small bits of money potentially, but again, once you start seeing it everywhere, it's essentially too late. And it's just you got to be patient. You got to actually have a long term plan and not let us be following what you heard from a headline because that just leads to nothing good. Nothing good, as we've always said here. Um, I don't think there was much more. Microsoft could move Call of Duty to a Game Pass and a massive subscription push. That would be interesting. That would be really interesting. And we did see Target's cutting prices on thousands of items as well. So there was a lot of news today. A lot of news. Let's jump into the question of the week. That is a good part for us, asking the questions that need to be asked. And the questions that we got today were a couple good ones that I liked. So Patreon, if you haven't heard of it, it is a subscription service usually used for creatives. It was created by Sam Yam. He created the platform Patreon to facilitate subscription-based income for what careers? I'm going to be general here. My guess is going to be creatives, podcasters, content creators, creatives as well, artists, any of those things. His platform only takes 5% cut of each pledge compared to 45% cut of revenue at YouTube. His was for artists, musicians, and content creators. So yes, I was exactly right. And that's why he created the platform because they usually don't have a centralized outlet to meet have people be able to use or to find their content or their buy their stuff. And Patreon is one of those centralized platforms that people use to have a subscription model, protect their work, and reach their fans. So that's good. Next question: can you name the top three reasons students take a gap year after graduating from high school? Not sure what they want to do is got to be one. Can't afford college, maybe two. Just want to work. Well, that's already figured that. That's the same thing as not sure. Those are my 2 guesses. Those are my 2. Gain life experience and personal growth. Travel to see the world, experience other cultures. Take a break from a traditional academic track record. Oh, okay, so I was really maybe I had one of them. Take a break, travel, see the world. Okay. This is interesting. Those are just like not the reasons I thought they would be. I thought there'd be more concrete reasons. Like you're not sure you want to do. I think that's take a break. Gain life experience, that's also take a break. And not show that's not show you what you wanna do. Yeah, that those are okay, interesting. Well, those are not bad. I like that question. I'm actually curious why people do it. It was never for me. It was never for me, but do people do doing it? It's not a bad thing. Folks, that was it. I'm traveling this weekend, so make sure you pass it along to your family and friends. We do this every week. Stay tapped in. We will.